I do want, time is just going by too quick as it always does. I do want to jump into our company before we run out of time here, and that is Zillow. I mean, real estate is what they do. Love their symbol, Z, as in Zillow. Now, they're not in real estate. It says internet content and information industry. So I guess while they deal with real estate, they're in the internet content and information industry. 6.4% short on the float, 96% institutional owned. No PE ratio. I don't like seeing that. That means they have no earnings over the last 12 months. We do see price to sales 8.6, about the same as the industry at 8.3. Price to book value 4.4 versus 7.1. Price to cash flow is very expensive, 42.7 versus 22, and no PEG ratio for Zillow, unfortunately. Now, they have no earnings over last year or last 5 years. Their sales did climb, however, by 15.3%, which is slightly better than the industry growth at 15%. The analysts give it a terrible 5-year earnings per share growth estimate of a negative 149.9%. The industry gets 15.3%. They do not pay a dividend. Look at the balance sheet. Current ratio, very good, 3.3 versus 2.1. And also, debt to equity is only 0.1. They don't have much debt, so they can go on through difficult times. Surprise on this, intangible assets, 63.6% of their assets. That's pretty risky because if those get written down, that could really hurt the company there. We do see a net profit margin. They lose about 2.6 cents in every dollar they bring in. The industry makes 30.2, so a big difference there. Return on equity, a negative 1.3. We do see free cash flow is only $215 million. I say only because the industry is at $48.7 billion. So I'm not saying anything that's excited me too much on this, and I thought maybe this would be a time to buy this. It was pull back a little bit, but maybe you got something good going forward.
Yeah, I mean, the reason it was kind of intriguing was Bernstein actually upgraded to an outperform this past week and said it has been warming up to its fundamental story inside the company's recent execution on revenue growth as a factor. And, one thing is, real estate kind of slowed quite dramatically over the last couple of years. Could we be at an inflection point where real estate starts to pick up and maybe that's where that revenue story continues to get better for Zillow? But looking at the current price for the company, again, their ticker symbol is Z, $86.74, 52-week range. Wow, the low $57 and the high $93.88. So much closer to the high over the low. Year to date, it is up about 17%. Looks like over the last year, up about 32%. Last 5 years, though, yep, this was one of those hype companies. It looks like back in 2021, it was trading, looks like near $200 a share. So definitely kind of petered out from the excitement back then. But going forward for Zillow, again, we go out to, let's see, they do report on a calendar year. We go out to December 2026. I see estimated earnings per share of $2.22. Fortunately, still gives a target sell price of just $36.85. So it's still expensive on a valuation perspective. And, you and I were kind of talking about Zillow beforehand. I'm like, this is one of the companies I want to like because I think there is room for growth in that technology of real estate.
I think there is too, and I like how because when I want to look at something, immediately I go to Zillow. Yeah. They've got that catchy name. They've got the eyeballs going there. And I know what they do is that they do sell, I think, the leads to real estate salespeople and stuff. It's just a great concept, and I'm disappointed it's not doing quite as well. And this could be a growth company that we may never get because we like to get things on sale. Growth company, we talked about things like the gambling companies, online gambling. We felt they would do well, but they were never a value. Could be the same thing with Zillow. I'm not sure what it would take to have a pullback for us to buy it or earnings go up, but I think it's a great concept. It's just not a value that gives us the safety we want to be with.
Yeah, I mean, the thing that I guess intrigues me about it, right, is I think they were the ones that kind of talked about this like super app where, it's all your real estate in one app where I think they are, it looks like on the summary, they do have something around mortgages as well. So it's not just the sale and leasing of properties, it's also around the financing of properties. And then as you said, I mean, there's got to be other ways they can make money because, just your average person that, is curious when a house goes up for sale in the neighborhood, most people go to Zillow. It's like, I'm sure that they probably make money or could make money from advertising on that platform too. I think there's a lot of avenues here for growth, and that's not the concern. It looks like sales and earnings are anticipated to grow. The reason yours was so negative, I think, was because it's coming off negative earnings.
Yeah.
But that growth is there. It's just how much are you willing to pay for it? And as value investors, that is something we don't like to get involved in.